quickly get an earnings call in. Paras Defence is the company and the stock on our radar, and the company delivered a good performance for the second quarter gone by. The revenue growth was fairly strong. In fact, I'm looking at numbers now. Look at this. Revenue is up 43% in the second quarter, and revenue has grown 55% in the first half of the year. Not just this, all of this is happening with pretty smart margin expansion. Plus, they've announced a lot of new order wins in the third quarter as well. So let's put it all together and get a full outlook going with Amit Mahajan, Director Technical and R&D at Paras Defence. Amit, good to have you on. And I really want to start over there because you have been, till now indicating that at an annual basis, you'll grow at 20 to 30%. But look at the second quarter, look at the first half, you're growing at 55%. So you want to increase the outlook for the full year itself? Are we talking about more than 50% growth in FY25?
Firstly, good morning and wishing you all a very happy Diwali. I think indeed, yes, this festive season has brought in a lot of smiles on our faces. I always maintained that 20 to 30% was a conservative one because when you're working in defense, you're working on national security projects, a lot of things depend on the platforms that are to be developed. But as you see, the tailwinds are on our side. Most of the development efforts have gone past in the past few years. What you see today is an amalgamation of a couple of things. One, a very, very strong order book, which we have and we continue to maintain. And along with that, what is happening is the phase of our transition from a component manufacturer to a complete system manufacturer is almost giving you the results that you can see. So the submarine periscope that we have started deliveries, the effect of our electro-optics division doing well, and defense engineering stepping up. If you see the contribution that defense engineering has given in this particular quarter or the whole H1 to take with is substantial. And that along with profitability, this is something this is going to be the new normal. And I think, yes, my estimates were conservative and I would like to keep it that way.
You'd like to be conservative. Okay, got it. But I think the actual numbers are speaking for themselves. You know, it's interesting that you brought up this whole transition aspect where you're moving from being just an individual component supplier to being an entire subsystems manufacturer. Is that the reason why the margin profile has also improved? Again, I'm looking at first half numbers for a wider picture because from about 24% margin, you're at 27%. So is this the new run rate? Would you end the year at 27% and is this a sustainable level?
Yes, this is the new run rate. And the reason for this is when I'm making a complete system, consider me to be the manufacturer of most of the components that I'm putting it together. So I'm retaining a lot of value in the system within the company. And that is giving the boost to my profitability.
All right. Hi, Amit. Good morning and good to see you in. So what should we work with in terms of margins then? We should work with this 25 to 27 range. Would that be fair?
Good morning, Nigel. Always nice to talk to you. Yes, you can look at, I would rather say 25 to 30% because the Q3 and Q4 are yet to come. These are legacy-wise been very, very strong quarters for us. But I think I would be conservative by saying whatever way we are going, we will maintain Q3, Q4, and the margins would look similar or slightly better.
You know, by the looks of it, it seems that you want to surprise the street at the end of the third quarter. So let's see whether or not that happens. A couple of other factors. Defense engineering is 55% of their mix right now. Where do you see that number stabilizing it? And also, if you could give us an updated order book. As on date, what is it? In the past, you've said you expect the order book to scale, I think, to more than 2,000 crores in the next few years. But by the end of this year, where do you see this number stabilizing at?
So the order book already stands at in excess of 850 crores.
Yes.
So that's a good visibility for a company like ours, where if you see the last year's revenue, you're looking at anything beyond 3x, and that's something which is way ahead of our estimates. We're going to be very, very comfortable if our order book is in excess of 2x, because that gives us good visibility for the next 1.5 to 2 years. And I think we as we speak, our order opportunity size is swelling like it's going beyond our estimates as well. So it's all good. The order book will sustain. It keeps coming in although we deliver, our order book still keeps growing. So everything looks fine. The opportunity size also is getting better. The space sector is booming. The electro-optics division and the opportunities related to electro-optics are doing really great. Our
Right.
subsidiaries opportunities have also multifolded, although they have not contributed to any revenues. But the RF and microwave division has substantial opportunities lying in front of them. And the Control Paras JV, as you already know, that it has a great funnel.
All right, Amit, we'll leave it there. You're sounding very, very confident, at least in terms of the runway for work, right? And so no problem with regards to the amount of work that is available for you in various sectors as you outlined. That's Paras Defense.